In today's video, I am going to be breaking down my 3 highest paying dividend stocks in my portfolio. Now, some of these may actually surprise you because I actually purchased them a very long time ago in some cases, and their dividends have rose since then, or I could have purchased some of them. I have purchased some of them during the recent downturn, and I've also lowered my average on some too. So let's check these out. So the first one is CIBC, and I owned a few shares of CIBC before the massive downturn. However, when it dropped from around $105 or $110 down to in the 80s, I was buying it like crazy. I was buying it when it was in the low 90s, and I purchased it when it was in the high 80s. I think it was around 88, and I got it again, I think around the mid 80s, around 85, 86, and I was purchasing it all those times. I actually think I got some at $95 as well. And since then, it has climbed to $151, and I equaled out my average dividend to not be the 3.86 it's currently sitting at, because I purchased and averaged lower during the downturn, and I was purchasing it years ago in the 70s, where now the dividend is equal for me to be close to about 7.5%. And I was grabbing it when it was up in that close to 8% range during the recent downturn. I think it was getting close to 9% at one point, and my average is 7.5%, which is pretty solid. Still a very good business to buy. Its PE ratio is low in terms of Canadian banks at 11.6. Generally past 12 is when you want to just hold off a bit and wait to buy it. And its average volume is still really healthy. Its 5-year chart, we can see, is pretty well sideways until the downturn, and it did reach around the 80s. I think I got it maybe in the 82, 83 range, but either way, I didn't exactly go into my history and check out what I got, but I was getting it a lot in the 80s. And of course, since then, it has skyrocketed. It's gone from in the 80s to $150. Sheesh. It's been paying $1.46 per share per quarter for a very long time. It's because, of course, they have not been allowed to raise the dividend, and because of the virus, and they've been making a killing during this time. So expect, in my opinion, a massive dividend boost next year sometime. The only thing is they have had 4 really good quarters. However, when it comes to their revenue and earnings versus something like a TD had lesser revenue just like CIBC. However, TD was able to grow their earnings with lesser revenue, while with CIBC they lost revenue but also lost earnings. So in my opinion, TD is technically maybe a better choice right now. However, CIBC, to be honest with you, is still a fantastic purchase, and to be diverse when it comes to the banks, you can buy all of them and you'll be essentially fine. Next is National Bank, and I was purchasing this many years ago when they were having issues, and everyone where I worked at the time said that I was stupid for buying them. And guess what? They have well over doubled since then. I was getting it in the mid to low 40s. I think I got some in the high 30s at one point, and from there it's currently only a 2.7% dividend. But because it's growing their dividends since then, and I was also purchasing some when they plummeted down, I think around $50 or so during the virus, that my average with National Bank right now is roughly 6.8%. So still very strong. This is why you want to buy and hold dividend stocks for the long term, especially ones that grow their dividend over time, because it starts becoming quite large. And we can see that here. I was buying it even before this, but from there, it's over the last 5 years has gone from just under $50, and it was a nice growth until the virus. And since the virus, it's basically been a rocket ship to the top. And of course, that's what you want to see. I was buying some around the 50 range here too. And we can see that when they raise their dividends, it's a pretty solid raise too. So of course, same as all of the other Canadian banks, they cannot raise their dividends right now. And something that actually surprised me was they had really good growth during 2020. Like versus, if you really think about it, versus 2019 where there was no virus, 2020 where there was a virus, and you really don't see all that much of a hit at all. No, basically zero hit to their revenue. They did have lesser earnings, however. But when this happens during a recession, in my opinion, that's fantastic growth into the future. They've also had 4 beaten quarters, which is also something that you really want to see. And then there's Enbridge, which is something that I have only recently started getting into. It's at 6.3%, and average volume of 7 million shares traded per day. PE is a lot lower than TransCanada, which initially is what got me interested. But then I started doing my research, and they're starting to get more into the green technology. I've said this in so many other videos. I made a video specifically about Enbridge about that, so I'm not going to be mentioning a ton of it here. However, low PE, looking into the future for green technology, 6.3% dividend, fantastic company. They were starting to grow their market price before the virus hit. Oil plummeted to 0 and less. And since then, it's been recovering nicely. I really wouldn't be surprised if it started testing 55 if oil continues to rise. And we can see that they are actually allowed to raise their dividend during this time, and they have been. And they actually never lowered their dividend like many oil stocks while the downturn was happening, which is fantastic. If you really think about it, that could be because of the green technology that they are investing in, or it could be just these companies just kept on mining anyways, and the oil has to go somewhere, and Enbridge is a pipeline company. However, we can see that there was lesser revenue and also lesser earnings in 2020, but that's no surprise. 2 missed quarters, 2 good quarters. It's going to be interesting what happens into the future. So these are my 3 highest paying stocks right now. I hope that you've enjoyed today's video. If you have, hit that like button and subscribe, and I'll see you guys again next time.